Hello and welcome everyone to our session on the impact of COVID-19 on digital financial services, or DFS. This is part of the third and final FIGI Symposium, and I'm LJ Rich, your moderator for this afternoon, and we have a fascinating selection of talks and discussions for you over the next hour and a bit. You can also choose closed captions or live transcript from the bottom right-hand area of the Zoom window, where you can see live subtitles, which I think is amazing. The Financial Inclusion Global Initiative, FIGI, is a partnership between the World Bank Group, the Committee on Payments and Market Infrastructure of the Bank of International Settlements, and the International Telecommunication Union, funded by the Bill and Melinda Gates Foundation to support and accelerate the implementation of country-led reform actions to meet national financial inclusion targets and ultimately the global universal financial access goal. FIGI funds national implementations in 3 countries, China, Egypt and Mexico, supports working groups to tackle 3 sets of outstanding challenges for reaching universal financial access. 1. Electronic payment acceptance. 2. Digital ID for financial services. And 3. Security, infrastructure and trust. And it hosts the symposia. To date, FIGI has held 2 symposia. The first FIGI symposium took place in Bangalore, India in 2017, the second in 2019 in Cairo, Egypt, and this is the third and final edition of the FIGI symposium, which takes place everywhere. Yes, virtually. The symposium provides a forum for dialogue amongst telecom and financial sector authorities, financial service providers, digital financial services providers, DFS providers, and related stakeholders to share experiences and perspectives on scaling up DFS. The COVID-19 pandemic has yielded an unexpected bright spot, accelerating regulatory reforms and enabling people excluded from traditional banking to join the financial system using digital financial services. Governments tapped into the services to provide emergency assistance, and there's a reduction in the number of people who rely solely on cash. At the same time, adoption of DFS at an unprecedented pace has exposed first-time users to a series of risks and challenges. So this session will explore some of the key regulatory reforms that have enabled countries to successfully reach out to more unbanked through digital finance, as well as the technological innovations that have been implemented. The risks to consumers will also be explored in light of rapid digitalisation, and what opportunities are there that may have been missed. We're also looking at key considerations for policymakers as we move into a post-COVID world. How do we ensure an equitable and inclusive digital revolution? Our formidable panellists will each make their opening statements. But first, it's a real pleasure for me to introduce our keynote speaker, the Director of BDT from ITU. Please welcome Ms. Doreen Bogdan-Martin.
Thank you so much, LJ. Ladies and gentlemen, it's a pleasure to join you today for this spotlight session on the impact of COVID on financial inclusion and the importance of inclusive connectivity to access digital financial services. Over the past year and a half, the COVID crisis has imposed a rapid pivot to digital finance. And we've seen this in the ITU Global Network Resiliency Platform, our REG for COVID, where we have been gathering hundreds and hundreds of efforts and initiatives that have taken place around the world to both maintain and extend connectivity throughout this pandemic. For many companies and individuals, COVID may have simply accelerated a process of digital transformation that was already well underway. Others were not so fortunate. And this move online has also dramatically highlighted today's unequal access to digital networks and services, as well as devices. And of course, this is posing significant challenges for smaller and emerging players, raising important cybersecurity concerns, and a whole host of highly complex regulatory issues. Worldwide, as we heard in the opening ceremony, digital financial platforms are pushing forward the frontiers of economic inclusion. Digital financial services, or DFS, have now been launched in more than 80 countries, allowing millions of individuals and businesses to move from exclusively cash-based transactions to formal financial services via a simple mobile phone or a laptop computer. DFS are bringing access to banking, insurance, and other important financial services to a greater number of people than ever before. And in developing countries in particular, they're also helping small-scale enterprises access core services, such as affordable credit, that are so vital to business sustainability and growth. But while this trend, let's say, is largely positive, marginalized populations are being left behind. We heard in the previous session that women in particular are affected, and that we together need to make greater efforts to include women in digital and digital financial services. We need to remember that in our post-pandemic world, the ability to connect to usable, affordable digital services is the new baseline for full social and economic inclusion, especially for women. So what are the challenges? On the supply side, ICT infrastructure is often lacking or insufficient for meaningful, affordable access. On the demand side, people in unserved or underserved areas may lack basic literacy and numeracy skills and the knowledge of how to use digital technologies, even where they are available. And of course, the huge surge in online fraud and cybercrime sparked by the COVID pandemic has heightened risks and vulnerabilities and also challenged trust around DFS, particularly for new and unskilled users. At the same time, DFS are themselves creating these complex new relationships between ICT players and financial markets that bring their own challenges. As convergence accelerates, I think it's clear that the ICT regulatory community will need to work ever more closely with financial and competition regulators. Yet for now, there's no clear mechanisms or frameworks for doing so. So what can we do? Well, fostering dialogue and collaboration across sectors, as we've done under FIGI, I think that needs to remain a priority so that we can strike the right balance between enabling financial inclusion that brings essential financial services like banking and access to credit to people everywhere, while addressing challenges in areas like financial and digital literacy, data privacy, data biases, as well as cyber risks. And the pandemic has reinforced this urgent need to transition to digital, but it's also thrown that sharp spotlight on these growing global inequalities, particularly the chronic and sometimes gaping digital divide that separates the digitally rich and the digitally poor, and between men and women. DFS can be a powerful driver of development, but we urgently need to put them within reach of the people who need them. And we need to find ways to empower those people so that they may use these transformational services safely and productively, so that they can improve their own lives and the lives of their families and their communities. Thank you very much. LJ, back over to you.
Thank you so much to Ms. Doreen Bogdan-Martin from the ITU. Next up, we're going to invite each of our panellists to give an opening statement. And we're going to start with Managing Director, Bank of Italy, Magda Bianco.
Good morning, good afternoon, and good evening to all of you. And thank you very much for this invitation. To tell you a few words, I will share my screen. Can you just tell me if you see the slides? Can you confirm that?
Yes, we can see the slides.
Okay, thank you, Jay. Well, our starting point today, as we heard, is the boost to digitalization during the pandemic, which has affected heavily financial services. We see new products, payments mainly, but also loans, insurances, different quality of these products in terms of speed, of easiness of use, but also new processes. Think of how credit scoring may be performed due to the massive availability of data and new actors on the scene, small tech, big tech, but also IPC and other agents. Well, this creates, and these are some examples, from the mobile money industry, and this is an example from Italy, and you see the growth of contactless transactions during the pandemic, or the increase of use of various financial instruments through the fintech industry between mid-2019 and 2020. Well, as we already somehow heard, this creates huge opportunities for financial inclusion, defined as the access and responsible use of quality financial services at a reasonable costs. It offers the opportunity to reach the unbanked, the vulnerables, and we heard already about women, but there are many other groups like youth, elderly, migrants, forcibly displaced people. It offers the opportunity to offer loans to those that were not able to have them before. It creates incentives and opportunities for savings due to a first access to formal financial instruments. This might increase resilience and well-being of individuals, but also create opportunities for growth for micro and small enterprises. And through this, I think digitalization might allow us really to leap forward in terms of financial inclusion as compared to the pre-COVID world. But of course, on the other hand, as we somehow heard, we have a number of challenges. Well, first, the threat for survival of some small financial institutions, and possibly new sources of exclusion for those who are not reached by digital infrastructures or who are not capable of using them. We have, as we heard, cyber risks, fraud, scam risks, which are already increasing, privacy risks, risks coming from biases in the use of data. And these are risks that are really important for vulnerable groups, as I said, for women who have been disproportionately hit by the pandemic, by youth as well, heavily hit, for elderly people, and for other groups like migrants. Remittances, we know, have been an issue during the pandemic, and forcibly displaced people. The Global Partnership for Financial Inclusion, which is a platform, a G20 platform created in 2010, is actually committed to work on this issue. It's committed to work on how to increase opportunities and limit challenges in this very difficult period. How digital financial inclusion for individuals and micro and small enterprises will allow to somehow leap forward and at the same time address the challenges, especially for these categories. Now we have a big issue, which is measurement. We heard that in many countries there was an increase in inclusion, in financial inclusion, but we actually do not have updated detailed information on inclusion during the pandemic. The usual data sets that we use for this, the Findex data set created by the World Bank, and the other data set, the one created by and adjusted by the IMF, or a new index on digital financial inclusion, again created by the IMF, they are not yet available for the current years or for 2020. Unfortunately, due to the pandemic, even surveys were very difficult to be performed. Hence, we will be working also with the GPFI, mainly with case studies, analysis of best practices, examples from various countries. But this makes it, well, really important to examine these examples, these best practices, to understand how much more inclusion we have. But we will have to concentrate strictly on, as I said, further possible sources of exclusion. What we do know is that we have to work on the conditions, on the what we might call the enablers for ensuring that the opportunities of digitalization are really sized and challenges are somehow limited. These enablers are of course of different natures. Obviously the most basic ones, as we heard, are digital infrastructure, inclusive digital infrastructures, and forms of digital IDs that allow to access this infrastructure. But the GPFI will concentrate this year mainly on two of these enablers, which we consider very important. On the one hand, digital financial education for both individuals, but also for micro and small enterprises, able to reach also vulnerable groups. And on the other hand, inclusive regulation and consumer protection, financial consumer protection, to reduce risks for consumers, but also for micro and small firms. These objectives will be reached by preparing 5 reports, which will be prepared for the GPFI by our partners, which are the World Bank, the OECD, the IFC and SMEs Finance Forum. 3 of them will be devoted to individuals. 2 will be devoted to micro and small enterprises. Our aim is, as I said, to identify best practices in these 2 areas. In financial consumer protection, we want to look for effective approaches to protect consumers in the digital environment, including the use of technology by regulators, by supervisors themselves, in terms of SupTech, in terms of regulation of new activities, but also in terms of redress mechanisms for consumers who have experienced difficulties in the relationship with digital financial suppliers. Digital financial literacy is the other area. We aim to identify best practices in terms of how to reach all, exploiting also the digital instruments per se, and hence how to reach youth, of course, mainly in schools, but also the elderly, which are less digitally equipped, or women whom we know have a lower literacy on average, or migrants. Many best practices are emerging, and we can discuss a bit about that afterwards. We do hope that by sharing them among all members, but also non-member countries, we will all be able to be better off in the near future. Thank you.
Thank you very much, Magda. I'd now like to invite the Practice Manager, Finance, Competitive and Innovation and Global Practice, the World Bank Group, Mahesh Attamchandani.
Thanks very much, LJ. I think we all have a sense of how devastating the pandemic has been, but it's really important to put some numbers to that picture. And so one of the things we know is that for the first time in 20 years, global extreme poverty is set to rise as a result of the pandemic. It's estimated to push an additional 120 million people into extreme poverty and possibly up to 160 million by the end of this year. And many of the new poor will be in countries that already have high poverty rates. And I think that's really important to recognize that there's a lot of progress that's been made over the last 20 years that this pandemic has reversed in a relatively short period of time. So since the onset of the pandemic, what we've been doing at the World Bank is stepping up our support to authorities in emerging markets and developing countries. And we have about 170 COVID-related projects spread across 110 countries. And one of the things of particular interest to this audience, I think, is that we've launched and scaled up COVID-19 cash transfer projects in over 55 countries with about 1 billion beneficiaries covered in active and new projects. And while digital financial inclusion was a development priority before the COVID-19 pandemic, it's really become indispensable now, both for short-term relief in terms of putting money in the hands of those who need it, but also as a central element of broad-based sustainable recovery efforts. So our financial inclusion team here at the World Bank Group has been actively supporting countries to accelerate digital finance. And much of our support, particularly as an implementing partner of the FIGI initiative, has focused on helping countries build both financial and digital infrastructure and enact policies that are needed for achieving financial inclusion. And our efforts have focused on digitizing cash transfers and payments, establishing faster payment systems, enabling digital identification and electronic KYC or know your customer technologies, protecting consumers, which is a crucial element of this effort, and helping countries in the provision of emergency COVID-19 relief through digital means to get households connected to those services and those transfers while protecting them from some of the heightened risks. So to go to some concrete examples, we've helped simplify customer due diligence and know your customer provisions through our lending programs in the DRC, in Nepal, in Morocco. We've helped implement fast payment systems in Georgia and Madagascar, Indonesia, and our cross-cutting work across the World Bank Group, which includes our friends and colleagues at the IFC and CGAP, on the so-called G2PX initiative, or the Government to Persons initiative, has launched technical assistance projects in 35 countries, and we focus extensively on digitizing social benefit transfers. We're also supporting countries focusing on digitizing broader government payments like public sector salaries. We've done that in Afghanistan, in the DRC, in Jordan, and we're kicking off work to facilitate the introduction of open banking in Indonesia, Mexico, and the Philippines. And our team continues to constantly look closely at the implications of COVID-19 on financial inclusion, and particularly implications on remittances as part of the G20 GPFI agenda that Magda referenced and led by her and the Italian presidency. So I thank you very much for inviting me to be part of this panel today, and look forward to this discussion with the panelists. Thank you.
Thank you very much, Mahesh. And now our final panelist will give their opening remarks. The policy lead from Consultative Group to Assist the Poor, that's CGAP, Gregory Chen. Thank you.
Thank you, LJ, and thanks to World Bank and ITU for inviting us here. It's great to be back and to be part of this conversation. I was, as we prepared for this, I was thinking back a year ago and how in shock all of us still were. I think there were even concerns about whether handling cash could transmit the virus. I mean, fortunately, that's not proven to be a serious risk. A lot of us haven't traveled. The lockdowns at that time were quite severe. I think we've learned a lot in the process. One of the reflections we have on all this is that digital DFS existed before COVID, and those countries and markets and policymakers who were investing in DFS seem to be better positioned to respond to the crisis. And so it is both COVID has both accelerated, but also revealed the importance of having strong DFS systems as a source of resilience for economies and countries. And I think back just a couple pieces or anecdotes. There was a microfinance institution a year ago in lockdown in Bangladesh who couldn't get any of their repayments. And in my discussion with them last week, they're in a lockdown again, but they're getting 80% of their loans repaid on time over digital means. And so it speaks to I think the benefits in that case are fairly obvious. I think about a couple of other countries and markets that have exhibited strong reactions to COVID. And one might be the infrastructure on digital finance that India has been investing in. Many of us know about the broader investments in both the regulatory and infrastructure side in India. And while it's not been perfect, we certainly have seen a big shift of stimulus and sort of relief packages over the Indian payment system. So there's quite a bit of encouraging news. Another country, and this is something the World Bank has been directly involved with, not with CGAP, but I bring it up, is that Togo, in their response to COVID, in a matter of 10 weeks, put together something called the Novisi program, which was a way of using mobile phones and digital technology to rapidly respond to in a cash transfer system to people who work in the informal sector. So, and this is partly because a digital infrastructure system existed. The unfortunate part of all this, it's also revealed countries that have not been investing properly in digital finance in before the pandemic. And certainly the pandemic might accelerate this. But there's a country in the Middle East that evaluated its options and went to distributing cash via the army. Another country in Latin America had an existing non-account-based over-the-counter payment system. They couldn't quickly switch over to an account or bank-based system quickly enough. So unfortunately, they've had to stay with their over-the-counter response to the pandemic. And so these examples reveal, the real benefits of having a strong DFS system that takes some years to build and invest in. And so we think that the COVID pandemic is a source of acceleration of some of these reforms. It won't happen so easily, and as my fellow panelists have highlighted earlier, there are risks as we now begin to push things over into the digital finance system. So there's no perfect system, and I think some of the risks have already been highlighted. I won't repeat those here, but I think this question in the opening remarks that there is remains a digital divide is to us remains very real. And so while we might push reforms that push out the boundaries of what's possible in digital finance, we also have to recognize that there will remain populations marginalized perhaps in other ways, but who will remain outside the realm of what's possible in digital finance. And so we do need to bear in mind building out systems that both capture the opportunities that digital finance offers us, but doesn't leave people out who are on the outside. And I go back to some of the work Mahesh referred to that the World Bank is doing on social assistance payments. And just as one example, more and more we can digitize those payments. But I think in any country you go to, there will also be a population who are not reachable over digital means. And so we still need to be able to respond to those populations and recognize some of both the power of digital finance, but also some of its limits. And in doing so, I think we'll have a much stronger response to the COVID pandemic and to take this as an opportunity to accelerate some of the really positive parts of digital finance. So let me pause there. I look forward to the discussion, and I'm going to, I guess, kick it back over to LJ.
Thank you. I have caught your kick. Thank you, Gregory. It's time to get our discussion going, which I'm really looking forward to. And audience, you're welcome to put your questions into the Q&A tab at the same time. Panelists, also, you're welcome to join your comments to previous answers. So if one person has said something and you'd like to add to it, please feel free to just jump in. So I'm going to ask our panelists to please turn on their video and audio. And we're going to start with the first question to all of you. Obviously, answering one at a time is going to be easier for the audience to understand, even with those subtitles going on. Okay, so what has been the impact of the pandemic on financial inclusion, especially for the most vulnerable and underserved segments of the population? We already know that women are taking on the majority of the childcare during lockdown, for example, but I would like to hear a little bit more. So who would like to start with that?
I'm happy to jump in, LJ.
Great.
I talked a little bit about the increase in poverty in my opening remarks, but to go a little bit deeper, in 2020, 8.8% of global working hours were lost relative to comparing to the fourth quarter of 2019, which is the equivalent of about 255 million full-time jobs, right? So it shows you the devastating loss of employment that's been experienced, which has a knock-on effect on financial inclusion. And it's really, disproportionately impacted vulnerable segments of the population. So employment lost amongst youth, 15 to 24-year-old cohort was much greater, 8.7% compared to 3.7% for adults generally. And losses in post-support income were relatively larger for younger workers and for the self-employed and low and medium skilled workers, again, exacerbating levels of inequality and showing the risk of a potentially uneven recovery and greater inequality in the coming years. But the big headline story, as I think we've noted earlier on in this symposium, is that women in particular are being left behind. They are disproportionately reporting decreases in income. women's jobs are almost twice as more vulnerable to this crisis than men's jobs. Women make up 39% of global employment, but 54% of overall job losses. Women-led firms are likely to see decrease in their sales and less likely to be able to access public support. So I think that, that is the really alarm-raising kind of piece of data that we have to think about in this pandemic. And the other thing I want to say is that consumer risks have really been heightened. So vulnerable consumers that were already vulnerable prior to this pandemic are seeing an increase in frauds and scams, whether it's things like ATM and PIN fraud and identification fraud. And there's been things in India like examples of fake emergency money offers that have led to people being victimized by that. And there's significant increases in app-based fraud amongst digital microcredit lenders that really we've seen accelerate during the pandemic. So I don't want to be a picture of all doom and gloom, but I think there are some real concerns we've seen materialize during this pandemic.
Okay, thank you. Gregory, would you like to come in on that, the impact of the pandemic for the most vulnerable and underserved segments of the population?
Sure. I mean, I think Mahesh has highlighted some of the numbers more starkly, and I'm not sure that DFS alone is going to be something that would address some of those underlying problems. It might, I think there's one other vulnerability to perhaps highlight, which is, and I think it's been alluded to, which is that the relatively lower rates of phone ownership and internet usage among women, and to the extent to which they might be able to take advantage of some of the things that digital finance offers. For instance, we do see some pockets of women who maybe sell more over e-commerce. This might be, again, I'm not saying that this is a large source of employment yet or a large source of income generating, but there is an opportunity there for people who might want to run a small enterprise from home, taking advantage of the possibilities of getting back on some of the income earning opportunities that platforms and other things offer. And there are some pockets in there that really are advantageous to groups that would be potentially left out. Having said that, there are some of these structural challenges around internet access, phone use, and also, as we've alluded to, the labor market. And digital finance alone would be one way to address this, but I think on its own these challenges are much bigger than DFS alone.
Thank you. Magda.
Yeah, just one word again about one of the categories, which is women, which we all recognize have been incredibly hit by the pandemic under so many respects, social, economic. One problem is that already before the pandemic, on average, women are less financially literate, and this is per se a source of exclusion. So this is probably a source of further distance, the creation of a further gap in terms of possibility of exclusion coming from the pandemic. And then another category which has been heavily hit is micro and small enterprises. And for them, of course, we observed closures. It depends a lot on the sector, of course. Tourism, transports are, of course, sectors which have been very heavily hit. And depending on the country, depending on the measures put in place by governments, they have been kept alive, but for many of them, this was not possible. And for micro firms as well, we have an issue of digital financial literacy, education. And hence, even there, we have something to work on to make sure that at least coming out from the pandemic, they are well equipped to exploit the opportunities.
I think as an interesting area there's a difference between educating the women who are not included and the men who are perhaps part of the issue of the women not being included. And it's a very delicate and difficult area to even understand. So I have another question, which is what's been the most successful interventions that have supported recovery? Greg, this might be one for you to start with.
Well, let me say on the women issue. I mean, one of the interesting things about the Novisi program that the World Bank was directly involved and helped was that they actually give a larger cash transfer for women than for men. So the households are actually incented to sign up women for the system. The same is true also to some extent in India as well, where they've moved from targeting households. So then with some of the account opening and cash transfer programs to targeting individuals. So this has actually increased the rate of participation of women more directly in some of those cash transfer programs. So those would be two maybe relatively more positive examples. I'm not saying it's not still stacked against women. I think some of them are, but there are things that can be done to redress some of the imbalances that we see. Those would be two examples that come to mind.
That's interesting. Thank you. Have there been, has anyone else got some examples of successful interventions along those lines?
I think we really need to express some relief at what has happened with remittances. We've been able to increase the speed and reduce the cost of remittances, and reducing the cost of remittances, which is such an important part of development assistance to emerging markets, has been on the agenda of the international community for quite some time. And the expectation was that remittances would move to around 700 billion, with more than 75% of those flows being sent to low and middle income countries. Mm-hmm. And then due to the lockdown, a lot of remittance service providers had operational disruptions, right? There were lockdowns in different countries, mm-hmm. particularly sending countries, and often remittance service providers were not prioritized as emerging services. But I think the expectation that they would drop significantly is actually hasn't happened. So there's been a really positive result there. And according to our remittance prices worldwide database at the World Bank, the average global cost to send remittances is about 6.5%, but doing it digitally would actually drop that cost to 3.3%. And I think that's a tremendous recognition of the importance of digital financial services to this important data flow. Mm-hmm. And so I think the fact that remittances, despite all these challenges, have continued to flow at fairly comparable levels is really one of the good news stories.
Thank you. So have digital financing innovations supported firms when coping with adverse shocks from the pandemic? I guess we're moving from the individual now to an organization. So let's talk a little bit about that. Who would like to come in on that?
Well, maybe a few examples that we are actually collecting now for the report, the report with the Global Partnership for Financial Inclusion. There are various instruments that can use micro firms, micro and small firms to enter the financial world in an easier way, in a somehow cheaper way sometimes. For example, in some countries, new digital saving accounts have been created, introduced with no fees or very, very low fees, basic forms of accounts, which allow both individuals but also micro firms to get into the system. Then instruments for an easier and better credit scoring have been introduced by some intermediaries. This allows small companies, which typically do not have a credit history, a well-developed credit history, to get into the market, to get loans, to get credit by intermediaries. Other digital financial instruments refer to invoice discounting. This is an issue which is again relevant for micro firms, which typically, or many cases, do not have collateral to offer in exchange for credit. So the digitalization of invoice discounting allows them to get credit. And this is something that was already in progress before, but we see experiences with these in many countries, both developed and emerging, and that helps micro firms as well.
Thank you.
Just a quick example, LJ,
Sure.
sort of from another market, which is, an e-commerce platform which handles the logistics of getting goods to the retailers, and also handling some of their finance and providing them some working capital credit, they saw a threefold increase in the number of retailers who wanted to move online. And so they've seen a rapid spike in their business because they solve a lockdown problem for some of the retailers. And there was an accompanying regulatory change, which is a lot of the goods moving over this platform were deemed essential. And so the trucks and other things and the logistics could move because they were essential items, basic cleaning products or other basic grocery store items. So a big shift of some of these retailers over to some of these e-commerce platforms, combined with both payment and credit financing, which is, so I think there's been some real accelerations of some of those things that we think are pretty positive coming out of the pandemic. So some nice pieces even for some of the smaller firms.
Thank
yeah,
you.
there's a fintech in Kenya called Kopo that's offered digital payment access to merchants through M-Pesa. And then what it does is it uses sort of big data analytics to look at merchant payment transaction data to offer SMEs a broader range of value-added services, such as short-term loans, for example, that don't require collateral. So there are some great stories like that, but we've been doing these rapid surveys of small and medium enterprises in emerging markets. And we're finding that only about a third of businesses have been able to increase the use of digital technology in response to COVID-19. Actually, that's a fairly sizable number, but I think it provides some guidance to policymakers that support programs, in addition to being involving straight cash transfers or financial support, should really incentivize the adoption of technology, whether it's e-commerce, as Greg was saying, or business-to-business digital solutions, and really focus on building firm capabilities, including managerial practices, for example, that help firms adopt this technology. I think that can be really transformative for small firms. Another thing that we don't spend a lot of time talking about, but that is a fairly big concern for us, I know, is looking at the failure rates of these kinds of businesses and providing, the legal tools and the legal framework for businesses that have to exit the market to do so effectively and efficiently. And we do this through some of our work around bankruptcy and insolvency. But the goal there is really to avoid the proliferation of so-called zombie firms. These are the firms that are, effectively not really alive, if I can use that terminology, but that continue to exist. And there's lots of evidence from previous crises that these kinds of firms actually end up inhibiting a recovery because they starve healthy firms of the needed access to credit that they'll require to come out of the recovery. So not strictly speaking a digital financial services issue, but very important when you think about micro, small, and medium enterprises.
Thank you. It's such a fascinating area. And I do feel like with all of these panels that we're just opening a conversation at this point, and we don't yet have the answers, which is why events like this are so fruitful. Okay, COVID-19 has demonstrated the importance of building enablers for DFS and has also accelerated the pace of many DFS reforms in an effort to reduce physical contact in retail and financial transactions. So I guess this next question is talking about what reforms have been the most impactful and where are the key lessons learned. Magda, I think this might be a good one for you to start with.
Well, I think as we have been discussing overall, the main enablers for digital financial evolution are the infrastructures, digital infrastructures, and the instruments that allow to access the infrastructure and hence digital IDs. And we've heard some interesting experiences in countries developing digital infrastructure, and this is of course typically a public role. But we have observed reforms or the introduction of digital IDs in some emerging countries, which have worked really well. Getting a digital ID for the whole, or almost the whole population. There are reforms now taking place regarding the aspects of protecting consumers from the possible challenges coming from digital financial instruments, and hence reforms regarding the possibility, introducing the possibility of consumers to get forms of redress when something goes wrong in the relationship, so they are victim of frauds or scams. The introduction of regulation regarding, well, for example, privacy issues. In Europe, we have a quite well-developed privacy legislation. In other countries, this is less so. Of course, some of these issues are somehow transnational. So, for example, competition issues concerning operators which work across countries are more difficult to deal with, but there is debate on this as well.
Thank you.
Could I come in just quickly and say,
yes.
just to top up what Magda has said, which is in the consumer protection, especially those questions are part of the sort of basic enablers. But in the chat, I think we'd mentioned, Mahesh had already mentioned KYC or proportionate AML CFT rules on account opening. I mean, if these are very small amounts, you can adjust your risk protocols for ease of account opening. That's one. The second is agent networks. People, even in the digital world, you've got to get out from digital to cash. And so you need this highly dense agent networks to be able to deposit and withdraw money quickly. And the third would be just more licensing of non-bank electronic money issuers so that the innovators can come in and it's, payment systems are not too much the capture of incumbents, but that innovators have the opportunity to play in the payment space as well. So in addition to the consumer, we'd add those three would be important enablers for DFS to responsibly develop.
Brilliant, thank you. Mahesh, I have a question for you. What are some problems that seem really simple at first thought, but are actually surprisingly complex when you examine things more deeply? For example, some COVID-19 projects that you talked about, you have many going. Are there any that are still in their infancy that are just kind of, you're trying to find a way through?
I mean, it's a great question. I think there are a number of challenges, but I think, financial education is one of these really challenging issues. And we all recognize that literacy and education are critical. It's important as we expand digital financial services to make sure that we're not helping unintentionally to victimize some of the most marginal groups that are being given access to digital financial services. But solving that problem is actually really difficult. So in Kenya, for example, which is in many cases the poster child for successful use of certainly mobile money, lack of financial awareness has contributed to over-indebtedness in the digital credit space. And the rise of default and delinquency can partially be explained, I guess, by low levels of financial capability by digital credit consumers. So how do you solve for a difficult challenge like that? And I think part of the answer is really, you've got to, we always talk about tailoring solutions for the local market, but nowhere I think is that more important than in this topic of literacy and education, because there are such, cultural specific, jurisdiction specific challenges to overcome in that issue. And so governments really have to be out in front of this, take a very active role, and try to tailor solutions for their local market. In Colombia, there was a study that showed that many adults, particularly the elderly, reported difficulty and discomfort in using mobile money interfaces and ATMs. And so most relied on members of their social network, especially family members, to carry out transactions for them. This involved sharing their PINs freely with others who help them access their accounts. So on the surface of it, that's a solvable problem, but it's a very specific and unique problem that would require specific and unique solutions. And people it's not like people are unaware of the risks this creates. They acknowledge that there's increased possibility of fraud due to PIN sharing. So I think This is something that we don't have a turnkey solution for. There is, as the cliche goes, no one size fits all, and definitely something we continue to learn as we work with countries to do.
Yes, I'm just thinking one option could be that you'd have a shared family PIN and then a one or two numbers for each person. I think it's a really difficult area to solve for, and I think that's why I find this so fascinating, because it is what they term a wicked problem in sort of engineering terms. There's so many complex areas. So how can we mitigate the risk of an uneven recovery? I think this might be a Gregory or a Mahesh question, this one.
Well, I'll come back to the concerns we have around gender, right? Because I think if you don't solve some of those issues, an uneven recovery is almost predestined. And so you've got to reduce the gender gap in mobile phone ownership. I think that's one of the most critical things. And again, for all the reasons we all know about the importance of mobile phone ownership or mobile phone access in accessing digital financial services. And again, GSMA's data tells us that women are 8% less likely than men to own a mobile phone, and almost 20% less likely to use the internet on a mobile phone. So this is both a question of access to ownership, but then again, facilitating education. And proactive government policies to support women's ownership of mobile phones can close that technology gap, I think.
Mm-hmm.
But I think sufficient gender disaggregated data that can inform these policy decisions is also important. We know the old adage that what gets measured gets done. And so you've got to know the complexity and size of the problem so you can adopt targeted policies and initiatives into your national financial inclusion strategies. And then I think as another panelist said on a previous discussion, representation matters, right? So out of 185 central banks globally, only 18 are headed by women. I mean, that's a startling and sad statistic. And 1 in 6 central banks globally have no women at all in senior management. So I think this requires a long, this is going to have a long tail, and it requires a lot of intentionality, a lot of hiring, and a lot of procurement and investment in women's equality. And I know we'll cover some of these aspects in some of the gender equity sessions during the symposium, but definitely a wicked problem, as it were.
Okay, thank you very much. Magda, I'd like to ask how you've identified risks and opportunities in this post-COVID world, if there are any that have stuck out as interesting use cases.
Sure. Of course, well, opportunities come actually from most or many examples that we saw. They come from specific products that are being developed and that can be used to include individuals that were excluded. For example, in terms of processes, I was saying the possibility of using a huge amount of data to do better credit scoring of micro firms. This means that agents which were excluded because they didn't have a history can now be included, of course, if they have a history coming from a huge amount of information that regards them is a good history, or who do not have collateral. They can be included through these different instruments, and the same for basic accounts, payments as a source of first inclusion in the financial system, and then a source of learning how to save, how to put money away, and even start a small business and so on. This is really an incredible potential for inclusion for, potentially an incredibly amount of people. Of course, in order for this to be a real opportunity, we have to control for all the risks, and many of these have been described. I do believe that apart from creating the condition for access to everybody, I do believe that working on forms of consumer protection that keep into account, as has been said, that some of the agents, some of the individuals, some of the households, or some of the small firms will not be able, at least in a transitory period, to access digital instruments. This thing has to be taken into account by regulators and supervisors. We have to make sure that, we have somehow to force the financial system to keep into account this and to preserve some forms of financial instruments which are addressed to those who are not digitally equipped. So we will have to have at least some agents, some intermediaries in remote areas who can deal with people who are not reached by digital instruments. But I do believe that and I do believe strongly that we have to have some forms of regulation that ensures that if something goes wrong, you can go to an authority, which can be a judge, it can be a central bank, it can be another forms of arbiter that deals with your controversy, and this gives ensures the building of trust into the system. Otherwise, you feel powerless if something goes wrong. But I do believe that the other leg is really, as has been said, financial education in a very wide sense. And this is a huge challenge because, as Mahesh was saying, doing financial education, we have learned it, means not doing massive things, or better, doing something massive, maybe with even TV programs that reach everybody, even those who are not digitally equipped. But then going specifically to the target, because each target in terms of culture, but also in terms of segment, has its own needs, understands its own language, and hence we have to speak differently to the different categories, to women, to micro and small firms, to the youth, to elderly, and probably even go deeper in terms of different categories. This is a huge challenge, but I think this is a challenge that we can win.
Thank you so much. Greg, you mentioned DFS existed before COVID, and we've seen the pandemic accelerate our use of technology. Even what we're doing now is something that may well have happened, but the pandemic has certainly accelerated that. So my question is, how have regulatory bodies responded to these behavioural and technological changes in the new normal?
So maybe I'll speak just to country examples where the regulatory bodies have
Sure.
And I have to give a lot of credit to the regulators around the world for their responses. I think in almost all the examples I can think of, the regulators have been incredibly pragmatic. So let me give a very specific flavor. One of the early things in the lockdown is, do we close all banking branches because this might be a source of transmission, long queues, handling of notes? I think very early on, a lot of the regulators realized that the banking system remained vital for economic activity for people. And so they figured out ways to keep the banking system and payment systems going, and sort of got it deemed sort of an essential service. And so allowed the economy to do the best that it could, despite some of these. So that would just be one example. Another might be, in the case of the Philippines, there was a cash transfer program which had been primarily managed by one public sector bank, but in the need to be responsive, they opened it up to multiple providers, including some of the mobile money operators, and so they rapidly changed how the programs with the regulators sort of help in making those programs much more pragmatic. So I give a huge amount of credit to the regulators. I think the bigger question on their mind are maybe sort of the long-term effects of COVID and how it hits the financial system overall and affects overall questions around stability. And that's not an area that I've looked at, but I think most regulators have to be looking at that question very seriously today, because the effects of the slowdown will be long, and it will certainly have some effects on the overall financial system. But I think I give a lot of credit to almost all the regulators that I've come across in the course of the last year in handling and how they've responded pragmatically.
Yes, there's something called co-opetition where people try and just generally make an area more accessible, be it digital financial services or anything like in sort of AI, for example. There's a lot of sharing and collaboration between companies that may traditionally compete. I can think of an example from virtual reality. There are lots of people that gather together and they share proprietary techniques and technology in a bid to kind of raise everything up. So it's quite interesting to hear that this is beginning to be taken up in other areas. Okay, I'm going to take some audience questions as well before we go into asking everyone to give their closing remarks. So let's just take a little look at the Q&A. Thank you so much, audience, for your questions. We really appreciate it. And we have we'll have one here that says, how did the postal system help with the era of COVID-19? Yes, I suspect quite a few payments are using the postal system, especially in areas where digital hasn't become the norm. So would anyone like to take that question?
Well, one minor thing, and then I leave the floor. Yes, certainly the postal system can and has helped because in many places it reaches even where the banking system, especially in this case in larger countries, has started closing down branches. The postal system typically has branches even in the remote areas, and hence in many cases, it has been part of reaching the people and remaining open and being a channel for financial services as well.
Thank you. Let's go for another question, unless anyone else wants to come in on infrastructure. Yes,
well, very quickly, I mean, I know of cases where the postal system has gone into insolvency and is no longer available. But in the case of India, they've actually started a payment bank. The post system spun off a payment bank. And so it has the potential to have all the post office delivery people go and either collect deposits or deliver payments. And they're trying to capitalize. So it can go either direction. I think a lot depends on how well they look to capture new technology and the modern world. Some may not make it. Others may capture the opportunity.
Yes, I think a particular strain on that system during the lockdown here in the UK, our local post office had a COVID outbreak and lots of people who work there were suffering, and therefore the post did not go through. And it's all incredibly strange, unfamiliar experience for people who rely on a system so much that you don't even think about what happens if it fails. And I think that the opportunity for DFS to kind of add a layer of reliability and trust is absolutely there, isn't it? I think the question that I'm going to ask before we go on to a couple more audience questions is, how do you balance preventing that consumer protection with encouraging trust, if that makes sense? It's like, how do you educate somebody on being aware and still and also encourage them to trust the system? This is another balancing act I suspect you've all had to tackle.
Yeah, I may answer as well, actually as a supervisor in my role as supervisor, financial supervisor. We always tell that actually the system of consumer protection is made of a number of legs which must work together. Otherwise, otherwise it's really unbalanced. So you have to have good legislation, good laws, and then you have to have supervisors who enforce them, publicly enforce them. And then on the other hand, you have to make awareness and literacy grow. But you cannot let only this leg work for consumers. Otherwise, of course, the trust cannot be there. You have to make sure that when you work on literacy, you can prove that on the other side, you're really working on public consumer protection. And as I said, I think another important leg is also somehow private protection, instruments to solve intermediary client problem. If you have smooth and easy system to solve claims that adds to trust. So you have to build a system with all these elements, I think.
I agree with Magda, LJ, and I think regulators shouldn't be afraid also of, shifting some of the burden away from consumers and onto those providing financial services. I think there's always this slightly exaggerated fear of stifling innovation, and obviously stifling innovation should be a concern, and that will hurt consumers as well. But things like truth in lending statements and disclosure requirements, and those requirements that are tailored for a digital environment, right, I think are really, really important, and including heavy sanctions potentially on violators of some of those requirements, I think are important, in this carrot and stick environment that regulators need to create. We'll shortly be publishing a very comprehensive look at consumer risks in a fintech environment. And I think you'll see from that publication that there are some unique risks that digital financial services pose, and there are actions that regulators can take ex ante, in addition to just making sure the consumers are educated, but actually to regulating the service providers.
One very...
Can I just...
Sorry, Greg, go ahead.
Oh, no, I just want to add one maybe complicating layer in this, and I'm not the experts that Mahesh and Magda are, but to some extent, consumers also need the ability to test and decide if they trust products and learn to trust them. And that's adults learn by doing, not necessarily by reading or getting long disclosure statements. You learn a product and a service over time. And so part of our challenge is to introduce products in a way that are reasonably safe, that allow people to test and trust them on their own. They're not going to take our word for it entirely, is my point. I think they're going to have to figure some of it out on their own. And so how do you allow enough of that to happen to gain their trust and earn their trust? Also needs some space for that.
That's very similar to the consumer technology arena. Magda?
Yeah, just to add to what Greg said and what Mahesh said, one very ex ante action that regulators can do is work on, in a sense, driving innovation itself. We now have sandboxes, innovation hubs that somehow favor innovation. If we manage to get into those, the regulation of those, also the inclusion aspect, I think that would be very useful, because it's important to push for innovation, to incentivize innovation, but it should be somehow guided into something that is inclusive and protect consumers. And we actually, in terms of regulation, we do observe all over the world, certainly in Europe, regulation in consumer protection that is somehow putting on financial intermediaries the burden to prove that they are introducing products which are already at the beginning in the best interest of their clients. We have regulation called Product Oversight and Governance, which asks for that. So it's not just that you have to be transparent when you propose a product, but this product has already been, must be designed in a way that it's really useful for consumers. I think that works together with other elements in ensuring that we are doing the best interest of individuals.
Brilliant. I had no idea that psychology was involved so deeply in DFS. This is absolutely brilliant. I'm going to ask a couple more questions if I can find some in here. I can see some brilliant comments. Thank you for those. And I think we have some comments about how undocumented people are affected more acutely. And I think we've sort of covered that. I think we've also covered, here's a question about increasing consumer financial awareness. They're saying in a space oversaturated by financial service companies. Okay, so I'm just going to paraphrase this question somewhat. How do you balance encouraging consumers to take out a loan and with working out their ability to pay it back?
Well, if I might start, you have to balance it both both with consumer protection on the one hand and financial education on the other. consumer protection in many countries actually requires financial intermediaries to make sure that they do not overburden consumers with debt they will not be able to repay. So typically a good consumer protection setup requires intermediaries to take into account the capacity of individuals to repay the debt they are taking. But of course, we have to work a lot with awareness. And well, here the challenge is how to reach the population, the individuals, especially adult individuals who sometimes are not really interested in financial education. So the issue is how to reach them exactly when they need it. That's the way to solve the issue. So we have to find ways to give them this information exactly when they really care. So when they take a mortgage for buying a house, or when they take another loan to buy another product, or when they have to make a financial choice. That's the moment when they're probably more careful and more receptive to financial education. So that's the moment when we can do something.
I completely agree with Magda, LJ, and I would just add that there are far too many countries in the world that still criminalize over-indebtedness on the part of consumers. I mean, we're all familiar with the sort of Victorian concept of debtor's prison, but that actually exists in many countries still. And so the notion that when a consumer does become over-indebted, even if all the safeguards that Magda's talking about, which I think are the most critical things, somehow fail, and we have a consumer that's become over-indebted, we can't see this as presumptively a criminal behavior, right? This is a question of risk sometimes, a question of mistake, a question of being misled. And so there has to be the ability for these consumers to get a so-called fresh start, right? Which is to be cleansed of those debts while still balancing the risk of moral hazard, of course, but then being able to move on and get re-entry into productive economic behavior again. And so that's, again, I think, an often overlooked part of this story.
Mm-hmm. Remembering people are people at the end of it all. I have one more question I'm going to ask from the audience panel here, and it says, has there been an increase in fintech startups as a result of the pandemic? Are there particular innovations cropping up as a result of the COVID-19 outbreak? And if so, what ones have struck you? I mean, clearly, contactless payment has been a massively adopted, but I would like to hear what you think.
Well, I may start.
Sure.
I don't have precise data, but there have been certainly a lot of fintech of startups, but I'm not sure as much as there could be in a better economic situation, because of course the pandemic has been a major recession, so it has put an obstacle to startups in general. So we do observe startups, especially payments. This has been the area where a lot has been going on. But in a sense, I think that the recession has been a break to the potential that was there.
Thank you.
Yeah, just to add to that, I think on the investor side for fintech, I think it's probably a slightly more uncertain market for raising money if you're a fintech. I don't know that for sure, but my guess is that decision making on the investor side is perhaps affected a little bit. But the market opportunity, I think, is also maybe more apparent. So it probably cuts all sorts of different directions for fintechs.
Mm-hmm. Thank you. So I'm going to ask everyone for some closing statements now, if that's all right. So I'm going to start with Greg. So we've had a little bit of time to talk about all kinds of things, from inclusion to how do you cater to vulnerable people who have been left behind. But is there anything that's stood out for you that you'd like to explore more of? Any problems that you think our audience might be able to help solve? Any sort of things that you think actually it's worth trying this as a result of our conversation?
Well, I go back to the big picture, LJ, which is to say digital finance won't solve all of the problems that COVID has kicked up or all of the problems of inequality or exclusion that existed before. But I think in our response, we can certainly make it much more useful in addressing those problems. And so I take from that the big picture that I start to see, and you said it very well earlier, digital finance is one more layer of resilience potentially to future problems and dislocations that are going to happen. So I think in particular about parts of the world that might be conflict affected or affected by climate change, where we might have maybe not a pandemic, but regional or localized dislocation of economies and people. And I think having a robust digital finance ecosystem could be vital to making those communities more resilient and more included. And I think some of the response to COVID that has been enabled by DFS sort of brings that to light. So I think I hope we're going to start to see DFS as a real source of national and regional and global resilience and invest in it that way. And in doing so, maybe help bring more people into that system and realizing that it's not going to solve all of those problems. I do worry a little bit we slide back. So you're already seeing some people who had moved over to digital. When things normalize, they actually go back to older systems and we fall back into our old patterns. So I think one thing for us to think about as a community is using the best of what we've learned in this crisis and capitalizing on that for more permanent progress.
Yes, thank you. We are creatures of habit. I'm sure quite a few people switched to online shopping for groceries when that was available. And then as things slowly unlocked, the urge to mill about in a supermarket or convenience store overtakes the convenience of having stuff turn up. And that's down to consumer behavior. People want to feel their fruit, which has always been an issue with moving to online services. Okay, thank you very much. That's really insightful thoughts there. Mahesh, I'm going to come to you next for your closing remarks. So any situations that you feel need more attention, any problems that you would like to solve, one thing in particular that you'd like to change or ask our fantastically interesting audience?
Thanks, LJ. I'd really like to leave a closing message for the regulators in the audience and to remind them of the importance, of course, of technology. And we've talked about that in terms of bringing financial services to the poor, but also their own use of technology, right? This is, important in strengthening cyber resilience and also in using supervisory and regulatory technologies or SupTech and RegTech to build their own capacities to stay on top of these emerging technologies that are interacting with consumers. So, making sure that regulators have the requisite basic technology infrastructure to work in a COVID environment, work from home, but then going a step further and using technology to enhance their supervisory capability, I think is really important. And there are a lot of products coming online from fintech providers geared towards this. And I think regulators need to start to tap into this to be more effective at doing their role.
Thanks very much. Yes, it's a call to arms for regulators. And I'm sure that if you're already on here, then you're going to be interested in how to get ahead of the next thing. So thank you very much for that, Mahesh. Magda, it's time for your closing statements. Any thoughts, any ideas that you would like to throw out there? Any solutions that you feel would absolutely be working if there was more support available?
Well, I think what comes out from our discussion is that there are a lot of positive things, a lot of opportunities. I think that really, if we want really to size them, to exploit them, we need a huge alliance here. And we have a number of actors that have been discussing and have been discussed. We need governments, institutions to make good rules and to ensure that infrastructures are there, and the good ones, inclusive infrastructures. We need regulators and supervisors to do well their work, even in terms of what Mahesh was saying, using well the technology to do their job better. We are starting, I think, all of us to use fintech to do better supervision. SupTech instruments are there. We have to make sure that we use them well. But then on the other hand, we have to convince also individuals and firms that it's in their best interest to work with us in terms of increasing their awareness, their literacy, because that will allow them to be, well, in a sense, for individuals, better citizens, more able to be resilient and to exploit all the opportunities, and for micro and small enterprises to grow and to ensure that we have a more sustainable and better future.
Brilliant. Thank you so much. Many thanks to all of our panelists, Magda, Greg, and Mahesh, and keynote speaker Doreen Bogdan-Martin for this enlightening and powerful session. And thank you for taking part. Thank you also to the audience for your kind attention and interest. And we have so many sessions for you to enjoy. Please be sure to check out the programme online. There's guaranteed to be something, more than one thing, that will pique your curiosity, and pick out the next sessions you would like to attend. I look forward to interacting with you all again. Good afternoon, good evening, and good morning, depending where you are in the world. And I'll see you soon.
Goodbye to everybody.
Thank you and goodbye.